Hi, welcome you all. Today we are going to discuss about the transfer pricing fundamentals applicable in UAE. Before we start, let tell you, we will try to discuss what is the transfer pricing, what is the need of transfer pricing, why it's coming to the picture in the UAE one. Okay. Before going to that, let you assume you have two companies. One is in your home country, maybe in another country like UK or India, and second company you have opened in Dubai or UAE. Okay, anywhere in there. For example, we will take full example here for the India. Okay, so that it should be a better understanding. In India, for example, corporate tax is around 25% or 35% sometimes. Okay, for example, for the sake of discussion, we will take as a 30% corporate tax in India. Okay, in UAE, corporate tax is 9%. Okay, and we have countries, we have multiple companies. For in our case, we have a company in India and we have a one company in Dubai. Then, as a businessman, to save the taxes, what we want to do, what we will try to do. Okay, for example, we buy one pen in India for 10 dirham. Okay, and usually we sell it for 12 dirham. Okay, in India. Then in Dubai we have a our company there we also sell at a 12 dirham. Okay, then what we will try to do in India, we have a corporate tax 30%, which is more than 9%. So what we will try to do? We will try to book profit as much as possible in Dubai, so that on Dubai profit we should pay 9% tax, and India we will try to book more and more expenses or more and more expenses and less income in India, so that we can save taxes on our Indian incomes. Okay, so in that case, what we do, we shift our profit from higher tax jurisdiction to the lower tax jurisdiction. Okay, that's why transfer pricing come into the picture. OECD guidelines and all tax authorities say this should not be happen. Okay, where is your brain and body? Brain is there, that should make a more profits. Like you are taking all your business decisions sitting in Dubai, so Dubai should take up more taxes. Okay, like this, this we explained just to frame what is the transfer pricing. That's why government say make some rules and regulations, so that we can analyze where you should book a more profit, where you should not book a more profit, like that. That's why this transfer pricing all picture come into the discussion. Okay, UAE also introduced the transfer pricing rules here under article number 34, and transfer pricing documentation under article 55. They have mentioned. We will discuss it later on. Okay, today's agenda is we will discuss about what is the transfer pricing, need of transfer pricing, international and domestic transfer pricing, key principle, who is associated enterprises, like related parties, what are the control transaction, what is the arm length principle, application of arm length principle, documentation requirement, and related law applicable to the transfer pricing in the UAE. We will discuss about this one. Okay, which I we just discussed about it. What is the transfer pricing, or what is the need of transfer pricing? Okay, for example, you have related party 1, related party 2. Okay, related party 1 independently sell to, if independent party 1 is sell to independent party 2, the pricing will be uncontrolled transaction. Okay, this is called a uncontrolled transaction. There is no control over it because both are the independent parties. If related party 1 selling to the related party 2, this is called control transaction. Okay, this is called control transaction. Okay, if these two parties transaction between them, it is called uncontrolled. There is no control over this transaction. Okay, I buy pen for 10 dirham, I will add my profit, I will sell at a market rate. Okay, for example 12 is the market rate. Here both are the related party. What we will try to do, we will try to do some manipulation to save the taxes. Okay, that's why transfer pricing, the need of transfer pricing come into the picture. Okay, What is the transfer pricing? Prices of goods, services, intangible also, okay, intangibles or other transaction between related parties. Okay, all those should be at a arm length price. What is the arm length price? We will discuss later on. Okay, what is the impact of it? Shifting income shifting income between different jurisdictions having different tax rates. In UAE there is also two jurisdiction. One is the free zone, okay, they are claiming 0% tax, right? Okay, some free zones, so if you are fulfilling some conditions, you will have 0% tax rate. And other one is another companies in like mainland. Okay, we have mainland, then it 9% here. Okay, forgive me for the writing. Okay, then what people will try to do? We will try to shift our their mainland incomes to their free zone entity. Okay, but to enjoy the 0% corporate tax here. Okay, but that tax authority will not allow. Let's say they will say, okay, maintain a transfer pricing documentation fully in free zone. Then we will allow you, or in mainland even, whatsoever the case may be. Okay, what is the transfer pricing? We already discussed. This is again UAE based company having subsidiaries in India. They are doing transaction between each other. It may be for the product, services, intangible, financial transaction, giving funds to establish business or any other things, giving loans. Okay, intangible like branding, royalty charging, they are for the brands and trademark. Okay, it can be services, any kind of services, headquarter services, products, they're selling, buying, selling. Okay, anything can be. TP is not an exact science, it is a subjective interpretation. If you can substantiate your standing, then tax authority will accept your study. Okay, concept of transfer pricing, there should be three things must be there. One should be, there should be a transaction. Second one is, there should be associated enterprise or related parties, and there should be income arising or not arising, both will come into the picture, because here is a question mark. Okay, what is the transfer pricing? Need for transfer pricing is, we already discussed everything. Okay, there should be associated enterprises. We here we call it related parties. Related parties control transaction, arm length principle, application of arm length principle, documentation requirement. This all we will discuss one by one. Okay, UAE transfer pricing regulations. Federal Decree number 47 of 2022 have described about the transfer pricing regulations. Article number 34 and 55 is there. We will discuss both the articles in detail. Applicability of transfer pricing, all multinational companies, all UAE entities with related party transactions, even it is for the single dirham, you have to comply. Tax group, if you are making with the intergroup arrangement transactions, okay, this will be also be applicable. It is more important. Okay, even you have a mainland company, your another company is mainland, still you should comply with the transfer pricing. Okay, might be there is a no tax evasion, there is no difference in the taxation, but still we recommend you should comply money laundering transfer pricing in both the cases. Article 34, article 34, I have fixed here full law here. Okay, what article 34 say? If you have a, in determining taxable income, transaction and arrangement between related parties must be at an arm length price, arm length standards. Okay, they have mentioned all the clauses here. The transaction or arrangement between the related parties meets the arm length standards if the results of transaction arrangements are consistent with the results that would have been realized if the person who were not related, uncontrolled transaction, has engaged in a similar transaction or arrangement under similar circumstances. Similar transaction and similar circumstances, two is a key point here. Okay, the arm's length result of the transaction or arrangement between the related party must be determined by applying one or more combination of following transfer pricing method. These are the methods given: cup method, uncomparable uncontrolled price method, resale price method, cost plus method, transaction TNM, transaction transactional net margin method, transactional profit split method, or any other method you can follow. The transfer person may apply any transfer person method other than the method listed here. He can apply any other method if he can satisfy those methods. In clause 3 of this article, where the taxable person can demonstrate that none of the above method can be reasonably applied to the determine an arm length results of that any such other transfer pricing method you satisfy the condition of clause 2 of this article. If he can prove that these all given methods are not applicable in my case, the another method is applicable, then he can prove that one and he can apply that method. There is no like obligation you have to follow the given methods only, but mostly these methods are generally used in the UAE. The choice and application of transfer pricing method or combination of transfer pricing method under article 3 or 4 of this article must be made having regard to the most reliable transfer pricing method and taking into the account the following factors. Most reliable method they need to follow. Okay, what he has to take in the care of contractual term of the transaction arrangements. What is the contracts? Okay, what is the contracts there? The character sketch of the transaction and arrangement. One is the contractual term, second one is the character sketch of the transaction and arrangement, third one is the economic circumstances in which the transaction or arrangement is conducted. First one is the contractual terms, second one is the character sketch of the transaction, third one is the economic circumstances in which transaction or arrangements are conducted, and fourth one is functions performed. FAR analysis we call it. Functions performed, asset employed and risk assumed by the related party entering into the transaction or arrangements. We call it FAR analysis. FAR analysis we need to do. What is the FAR analysis? Functions, who perform which function. Okay, we need to see. Second one is the who deployed the assets. Okay, third one is who is taking the risk of the business of whatsoever, but that risk. Okay, who is taking those risks, he will be taking more profits. Okay, FAR analysis we need to do. And next one is the business strategies employed by the related party entering into the transaction. What are the business strategies employed? Okay, that we need to see. These 5 points we need to see. Okay, we need to consider with the most reliable transfer pricing methods. Now come to the next point, the authority examination as to whether income or expenditure resulting from the taxable person relevant transaction arrangement meet the arm's length standards shall be based on the transfer pricing method used by the taxable person in accordance with clause 3(4) of this article, provided transfer pricing method is appropriate having regard to the method mentioned in the clause 5 of this article. Clause 5 is this one. Okay, application of the selected transfer pricing method or combination of the transfer pricing method in accordance with the clause 3(4) of this article may result in a arm length range of the financial results or the indicator acceptable for establishing the arm length results of the transaction or arrangements. Okay, this is arm length price. Okay, about arm length price. Where does this all the law? You can read it. Main part we have already read. Okay. Now come to the article 55. Okay, what is the transfer pricing documentation? They have mentioned about this documentation. If they ask, you have to provide within the 30 days. Okay, what are the documentation? We will see in a couple of next slide. Okay, they have issued ministerial decision number 97, where they have mentioned about the documentation, which I was talking about last slide. Master file and local file you have to must prepared if you are crossing these two limits. One, your group consolidated revenue is more than 3.15 billion dirham and your standalone entity is making more than 200 million dirham turnover revenue. Okay, then you must maintain this local file and master file both. Okay, cabinet decision 44, this is about the CBCR. This is not related to the corporate tax. This is about the CBCR. Before in 2020, government has issued this CBCBR requirement. This is the same limit as we mentioned earlier, 3.15 billion dirham turnover or more. If you have, then it is applicable on you. Okay, then some another condition is there, 750 million euro transaction something. Okay, now government has issued, FTA has issued guidelines on transfer pricing. Okay, what transfer pricing principles should be there? Arm length principles you need to follow, documentation obligation, TP method which you have to select, how to do the risk assessment. I told you know, FR analysis, functions, asset and risk. Okay, in the transfer pricing guide they have explained everything in very well detailed. International framework adopted, OECD guidelines, transfer pricing guidelines 2022 edition. Same thing they have explained again. Everything is same. Like local file, master file, CBCBR report, you need to file. Transaction should be at an arm length price. Okay. Now summary. These are the summary of the additional decision, the additional law issued by the UAE government. Okay. And what are the disclosure requirement in CT returns? This is about the CT returns. Okay, if you are doing with the transaction with your related party and your aggregate turnover transaction with the related party is more than 40 million, you have to give the detail of your related party, types of the transaction you are doing, whether it is at arm length price or not at arm length price, you need to disclose there. Okay, if you are doing transaction with the individual transaction and it is more than 4 million, still you have to disclose about that particular individual company details to with whom you are doing that transactions. Okay, this is in aggregate all your group transaction. This is with a standalone one single company you are doing transaction. Okay, and now it's come to the part of connected person. There is a definition given by the UAE authority, connected person. Okay, if you are doing any transaction with a connected person more than 500,000 in a year, you need to disclose everything in your CT return, that this particular MD, this particular director or manager, we have given them a salary of 800,000 this last 2024 year, that we need to disclose in detail. Okay, this is we come to the end of our slides. Thank you everyone. There's so many things are there need to be discussed, like what is the arm length price. Okay, how to calculate the arm length price, what is the benchmarking, how to calculate, how to calculate the benchmarking, how to do the arm length pricing. Those things we will discuss in upcoming videos, inshallah. Till then, bye bye, ma salama, assalamu alaikum.